Today, we're going to put two of the biggest infrastructure buildouts in modern history side by side, the telecom boom of the late 90s and the AI boom that's happening all around us right now. We're going to use the past as a kind of lens, to really understand the massive, massive bets being made on AI today. Okay? Let's just dive right in.
So, this brings us to the big question, right? Are we just seeing a familiar pattern play out all over again? A massive gold rush of investment, all fueled by these world-changing promises that could, well, lead to a really painful correction? Or is this time truly different? Let's take a look at the data and see what it's telling us.
The ambition in both of these eras was just identical in scale. The goal was to build the absolute foundation for the future. The 2000s, that was all about building the internet's physical backbone. Today, the focus is on creating an intelligent one. One of those stories ended in a pretty spectacular bust. The other, well, it's still being written.
So what was the spark? What actually ignited these two completely explosive eras of innovation and spending? Let's dig into the events that kicked off each gold rush. The telecom boom was really fueled by a perfect storm. First, you had the 1996 Telecom Act, which basically just opened the floodgates to a ton of new competitors. Then, you had incredibly cheap money and this wild investor euphoria, which led to billions being poured into companies with basically zero revenue. And all of it, was built on this unshakable belief that internet traffic was just going to grow forever. Now, the spark for the AI boom was different. It really started with a genuine technological leap. Models like GPT-3 suddenly started to work in ways nobody had seen before. This, in turn, ignited this intense fear of missing out among big tech, kicking off a GPU arms race. All of it is fueled by this huge bet that AI will become a massive recurring revenue machine. An arms race needs fuel, right? And in this case, that fuel is money. We're talking billions upon billions of dollars. But where did it all come from? And who was footing the bill? The scale of the telecom boom was just staggering. Let this sink in. By 2002, the industry had racked up over $1 trillion in debt. And this wasn't profit they were spending. This was money raised from high-yield junk bonds, which are basically just riskier loans sold to investors who were chasing the hype and hoping for huge returns. And this is where things get kinda crazy. A really dangerous practice called vendor financing popped up. You had these giant equipment makers like Lucent literally lending money to their own customers so those customers could, well, buy more of their equipment. It was a completely self-inflating bubble, a snake eating its own tail. It was only a matter of time before it burst. Now, compare that to the AI boom. It's funded in a completely different way. In 2023 alone, the four big tech giants invested around $140 billion. But here's the key. It's not from debt. It's coming from the massive cash flow of their already profitable core businesses. They're paying for this build-out themselves. And the deals themselves, they are so much smarter this time around. Look at Microsoft's investment in OpenAI. It's the perfect example. It's not just, here's cash for a piece of your company. No, Microsoft gets 75% of the profits until its investment is paid back. And the deal locks OpenAI into using Microsoft's Azure cloud. So it's an investment, it's customer acquisition, and it's a defensive moat, all rolled into one slick package.
Okay, so all of that investment led to a massive construction boom. Let's look at what all those billions of dollars actually built. What's the physical stuff on the ground?
During the telecom boom, companies laid an incredible 39 million miles of fiber optic cable across the United States. That's just an astonishing feat of engineering. It was driven by this belief that every single one of those strands would be in use any day now. People said there was enough fiber laid to reach the sun. But here's the reality check. Of those 39 million miles of fiber, only about 2 million were ever actually lit up or activated. The rest of it just sat there dormant. They called it dark fiber. It was this massive physical monument to a future that was still years and years away. This created a colossal overcapacity problem.
So if fiber miles were the metric back then, what's the metric today? It's megawatts of electricity for data centers. The AI build-out is so incredibly power-hungry that just one area, Northern Virginia, the world's biggest data hub, is planning to add enough new power capacity to run millions of homes. The bottleneck this time isn't just money, it's the actual electrical grid.
And would you believe it, we are seeing the dark fiber of the AI era.
Despite all the hype about GPU shortages, some of the most advanced AI supercomputers on the planet are running at less than half their capacity. It raises the exact same question. Are we building way more capacity than the market can actually absorb right now?
This all leads to that critical moment in any boom cycle, the moment when all those optimistic forecasts collide with the hard, cold wall of reality.
Back in 2000, analysts were predicting that US internet traffic would hit 1,000 petabytes a month by 2003. The actual number? It was closer to 100. I mean, they weren't just a little bit off, they were off by a factor of 10. And when you have that much extra supply, bandwidth prices completely collapsed.
And you guessed it, we see a really similar tension playing out in the AI boom today. Microsoft is investing in an enormous amount in capital expenditure, or CapEx, that's money for physical things like servers and data centers, but the revenue they're getting from AI services, while it's growing fast, is still just a fraction of that spending. The big bet is that revenue will eventually explode past the investment, but for right now, there's a pretty big gap.
So what happens when the music stops? What's the fallout? Who ends up paying the price? And who is left to pick up all the pieces? Well, the telecom collapse was swift, and it was brutal. Within about 18 months, these industry giants like Global Crossing and WorldCom, who were drowning in tens of billions of debt, just went bankrupt. Poof! Over $100 billion in debt simply vanished into thin air. So who got stuck with the bill? Well, the equity holders were totally wiped out. Bondholders got back maybe pennies on the dollar. The vendors who did all that risky financing, like Nortel, they never really recovered. But the old school incumbent telcos, even though they were bruised, they survived. And they got to swoop in and buy brand new fiber networks for almost nothing. And this, right here, is maybe the single biggest difference between then and now. In the AI boom, big tech is pretty insulated. Their risk isn't about survival. It's about whether they get a good return on their investment. The real vulnerability is with the smaller, debt-funded players out there. They look a whole lot like those telecom upstarts from the 2000s. So the endgame here might not be a total industry collapse like we saw with telecom. Instead, it might be one word: consolidation. If AI demand slows down or stalls, the tech giants who funded this whole expansion are perfectly positioned to just acquire all those valuable assets, data centers, GPU clusters, at a massive discount. This isn't just a financial outcome. It's a structural shift in who owns the keys to the next era of technology. So there you have it. The parallels are pretty striking, right? Massive investment, revolutionary promises, and even signs of overcapacity. And yet, the key players and the financial plumbing underneath it all are profoundly different this time around. With the numbers on the table, the question for all of us is, how is this first going to end? Thanks for tuning in.